Today on the Frame of Mind 8 podcast, we are talking stock, trade, and investments with my man O. So get out your pencil, your pad, your papers, and your notebooks because he's going to drop some serious knowledge on you guys today on the stock and trade investment. The Frame of Mind 8 podcast begins right now.
Get your mind right. Get your mind right.
It's a frame of mind.
Ladies and gentlemen, welcome to the Frame of Mind 8 podcast. This is your boy Simbawi Nibaye Jr., a.k.a. TK, and my man Omar Williams. We call him O. Say what's up to the peeps.
What's going on, good people?
It's another lovely Wednesday, and y'all know how we do. We jump right in and get things started. But before we do, it's Affirmation Wednesday. Y'all know how we do. Get our affirmations in and out the way, and get our day, afternoon, evening, or whatever time of the day it is for you started. If you're getting the replay of this audio-wise, whatever day it is, affirmation that day. If you're getting the replay of the video, same for you, affirmation, whatever day it is for you. But for us, it's Affirmation Wednesday. Are you ready? Let's get it started. If you got them written down or you got to memorize, whatever you got, let's get this thing going so we get this day started and keep things moving on the day. Are you ready? Today will be a good day. Today will be a great day. Today will be an awesome day. Today will be an amazing day. Today will be a phenomenal day. Today will be stress-free. Today will be a stressless day. Today, I will overcome all barriers that want to stop and block my progress. Today, all circumstances, issues, and situations will work in my favor. Today, all things will line up for my good. Today, I'll become better than who and what I was yesterday. I am a go-getter. I am victorious. I am triumphant. I am an overcomer. I never lose. I either win or I learn. I take authority over this day. I will dominate this day. I will conquer this day. And everything I have spoken into this day will happen as I have affirmed because I am more than a conqueror. Let's get it going. So today is stock and trade and investment day with my man O. This is the podcast where I step aside. I let him be host and let him rock out. So if you guys are ready, you're ready to get some good tips today on Stock, Trade, and Invest Day, episode 6 with my man Omar Williams. Oh, the floor is yours, my friend.
All right, man. Thank you. Appreciate you again, good brother. So today, we're going to get into it's called top-down analysis. Okay, we're going to hit it. We're going to quit it. We're going to be in. We're going to be out. Okay. So today is top-down analysis, and I want everybody to get this because it can help you know which direction you need to be trading on. So if you were here for the time when I talked about you could flip a coin literally with the proper money management and you could have a winning strategy whether the coin says heads or tails. So if you do top-down analysis, it will allow you to know which major direction the market is going in. It's like it allows you to see the forest for the trees. Okay, so let's get some points, and then I'm gonna share some things on this chart here for you. So here's the first point I want to make. When the stock market doesn't support the direction that you are looking to trade, this is point one. So when it's not supporting the direction that you're looking to trade in a particular stock, then don't trade it. Okay, more than 50% of a stock's price action is influenced by the entire market itself. So what that means is if the market is going up, it's a 50% chance that your stock is going up, okay? And another 30% of stock's price action is influenced by the industry that it resides in. So what that means is there's different industries. There's finance industries, there's consumer staples, there's energy, there's tech, Okay, so if you say you pick a stock like Tesla or Apple, okay, they're in a tech sector. So if the tech sector is going up or down, it's a 30% chance that whatever that sector is doing, your stock is doing that too. Knowing things like this helps us out big time. Okay, because we won't just buy when it's saying to buy. We'll buy when the market is saying to buy. Okay, regardless of what your stock is saying, you want to go in the direction of the market, and the remaining 20% of stocks price action is based simply on the company itself. So out of all of that, 20% of the movement is literally based on just the company itself. So I'll give you an example. A company's earnings may come out. Okay, they had a good earnings report, but the stock market is going down overall. That day, the earnings report may come out, stock jumps up for that day. Everybody's like, oh, we're buying this stock down, but the overall market is down. So just for that day, that 20% chance it pops up, and then it's going to probably turn around. Okay. Point two. So this is for our trading strategy. Okay. Point two. When the market changes direction, a successful trading strategy requires that you change direction with it. Okay. So for anybody out there who's seen, like I said, past things or saw what I taught you, your strategy has to be your strategy. You can't go by your heart. Don't go by your feelings. Don't go by what you think the stock market is going to do or what somebody told you. You have to stick to your strategy, and that's how the numbers pan out. Okay, when you test your strategy, you have to do every single thing it's telling you to do. Okay, so when you do that, if the strategy is changing direction, you have to change direction. Okay. When the market, and it's so simple. When the market is going up, trade to the long side. Long means up, short means down. When the market's going down, trade to the short side. And when the market's uncertain, which means it's going back and forth in a range, some people say to reduce your position or reduce the number of positions you have. I say stay out of the market altogether. Okay? And one last point, if you're writing this down, one last point. When you are on the wrong side of the market, I know it keeps sounding redundant, but it is what it is. When you're on the wrong side of the market, don't let your stock trading strategy stay on the wrong side too. So again, when you're creating your system or creating your trading system or your investing system, make sure it switches with the market. Don't have something so high tech or so just a so complicated system that it's keeping you in markets that are not going the direction it's telling you to go. Okay. Okay. So that's my last point. And then I just want to share these screens with you just to give you an idea of what top-down analysis would look like if you when you're trading or investing. What do I hit, good brother?
So you just go to present.
Got you.
And then go to share screen.
Share screen, my man.
And then you just pick which one you want to share.
Okay.
That should pop right up.
My man. Share the system.
And while O's doing that, I know I'm off screen right now. But while he's doing, those of you getting the video portion, I'm off screen. But changing the directions of the market with the market. We're going to just touch on these once he's done. I got you, brother. I see you over here.
We good?
There we go. I got you.
All right. Good. Okay, bet.
All right, I'll come
back.
back.
My screen?
Yeah, I'll come back to my point later. I'm going to let you go ahead and do what you're going to do.
All right, here we go. So this is an example. So there's actual day trading, there's swing trading, and then there's investing. Okay. If you're a swing trader, you want to do top-down analysis starting from month, week, day, and sometimes 4 hours or 8 hours, okay? But it's usually month, week, and day. So we'll start at, let's just take, for example, say we're swing trading or investing. We'll start with the S&P 500, and what that is, that represents the 500 biggest companies in the market, okay? Everything you know is in this ETF. So it's called the SPY. So we're going to look at the SPY right now. So let's start. If we were to do a top-down analysis on the SPY, okay? So I'll start with the month. This is a monthly chart. Now, if you can see this, each bar represents a month, okay? Now, I'll go back. So the current month now is a red bar. Last month's bar was red, right? Then you had, in August, it was a green bar, but if you know anything about candlesticks, it had a high wick rejecting going up. So it was coming back down, creating a hammer. Or not a hammer. What do they call it? Not a hammer, but it's the opposite of that, right? Which insinuates it's going back down, right? Then after that, in August again, in July, red bar, June, red bar, May, red bar, April, March, okay, February, and January. So if you just look at the top-down analysis, starting at the month, you would have known that at least around January, February, you shouldn't have been buying anything. Looking at it top-down. Now, so just say we started in February, okay? Then we go down a week. So this is the weekly chart now. Now, my overall bigger chart says the market is going down, okay? Then I look at the weekly. Now, in the weekly, you see a little bit more pop-ups. You know, there was a pop-up in March here. Here was a pop-up in July here, if you can see it. Okay, what did I say? February. So if we go back weekly, this is January here. This is February, okay. So in February, it's going down. So if I said, okay, February is going down, I'm only taking trades in February or around that time down, okay? So our weekly's going down, our monthly's going down. Now I go to my daily. And this is where I'm going to take my trade off of, okay? So if we just go back, let's see, there's December. Let's go back to February. So I said I'm only going to take down trades, okay? So if I'm going here, and I'm not going to get technical with it, but let's just do by bar, okay? So if it's a green bar, it's up. Red bar, I'm going to take down. It's just that simple right now. I'm not going to get complicated. So around February, we would have been in a trade here, if you see where my cursor is, right? 458 roughly. It turns green on, what's this? So this is January. I'm sorry. Well, let's start at January. We'll start at January. 458 on Wednesday, the 19th of January, okay? The first green bar we get, because we're not taking any green bars, because the overall market around that time was what? Down, okay? Goes down to 438. That's a 20-point swing. Anybody know about stocks? 20 points in the market can make you a lot of money, and that was over a matter of days. So now when it's turned green, we're out of it, right? We're out of it. And again, this is just basic going by the bars. It's so many other things that I could teach you of how we can even break this down even more, where the bars don't even really matter. But I'm trying to give you something so simple that you can look at it and go, okay, this is not as hard as people are making it. Okay, so when it's green, so say, okay, overall market is down. And again, this is for swing trading and investing. Overall market is down. We're not taking any green bars. So we're out of it. So we made 20 points, goes back up. Now we're in February. Our first red comes on Thursday, the 3rd of February. We take it. We don't get that big of anything because our first green is here. So we kind of stay even. We're still good. Okay, 2 more green bars here. We're not in it. Our first red bar comes on the 10th of February and goes all the way down to here. Gets us out. We got a little bit of a win on the 15th. We're out of it because it's green. We're back in on the 17th. It runs all the way down to here for 20 up to 429. Now we got in at 439. It's another 10 points. Now, our losses were small. If you realize what I did, our losses were small and our winners are big because why? We're going with the overall trend of the market. Okay, so that's what swing trading. And as we see, as I scroll over, I'm not going to keep going through every bar. But if you just literally look at every red bar, you would have been taking that since January of this year because the overall market from top down was going down. January of the month was going down. So every red bar, like again, that's just going on these bars, we would have took. So if you just look at the charts, we would have been in some money. We wouldn't have been in there, but we'd have been in there. We'd have been in here. Wouldn't have been here. Would have been in here. We wouldn't have took this ride up. We'd have had a few losses, not much, because if you look at the reds, not that big. We would have been out of there. We'd have hit this big, been out here, and we hit that big. So you see the trend here, and I know I'm probably coming it off like it's so simple. It's not. It is simple if you stick to your plan. So that's for swing trading. Now, if you want to do trading on a daily basis, you want to start from, I recommend 4 hours. We'll start 4 hours, go down to hourly, and then to the 15. And you pretty much do the same exact thing I showed you from monthly, weekly, daily. So let's just do a quick one on the SPY. Now, this one's going to be a little bit more recent. We're not going to go back to February. Let's just go back to something like, let's say September 22nd. Okay, overall market and a day-to-day trading was down on September 22nd. Or September 22, it was on the 13th. September 13th, overall market was down on a day-to-day trading basis. I'm starting at the 4 hour. I hope everybody's following me. Okay, then I go down to my hourly. If I go back to that date, around here, looks like it's going down. As you can see it, see, coming down. And then I go to my 15-minute. Find that same date. Find that same date. And pretty much do the same thing we did. We take every red bar from that point on. We'll start here. Boom. Go down to here. Now, the gains won't be as big on the day-to-day trading, but you'll get to eke out 4 points here, 3 points there, 2 points here, 1 point there. You know, you have smaller losses, right? So day-to-day trading, you might not get the bigger wins, but you'll accumulate wins, okay? So again, we'd have took this trade, went to this green, stopped out. We'd have won that one, right? We took a look. We're not in it because we're going down with the overall market. We get in back here in this red, down all the way here. Make a long story short, you see what I see. If we stay out of the greens because we already have our direction of the overall, it's going to keep us out of a lot of bad trades, and it's going to keep us in to the good ones. Now, when I say your trading strategy needs to reverse with the overall market, well, all we will be waiting for is, let's see, hold on. I'm sorry, hold on. You would just wait for a green overall bar, meaning whether it be the monthly or the 4 hour. So if you see an overall 4 hour bar going up, everything changes on that 15-minute. If the hourly is going that direction, we take every green bar on the 15-minute. And that is my presentation.
Well. Hit it fast, hit it hard, make it do what it do.
Get it
now,
out.
one thing I'm gonna say. Now, can you make your first point again? Your very first point you make. Can you say that one again? Your very first point.
I got you. Hold on, I got you. It was when the stock market doesn't support the direction that you are looking to trade in a particular stock, then don't trade it at all.
Got you. So I'm gonna just give just a small snippet of that. So there are people who I know who what they do is they force trades.
Mm-hmm.
And when I say force trades, they're like, oh, it'll come back. Oh, it'll come back. How do you know?
Right.
How do you know what it's going to do? So that's don't force it. Like if all your strategy says don't take it, don't take it. If it says take it, then take it. Right. The second point was change directions with the market.
Mm-hmm.
And there's people who I know, again, they'll be like, oh, it'll turn around. It'll turn around. It'll turn around. And as it's going down or going up, whichever way you're doing it, they're losing. They're losing. And like, it'll turn around. And it's like, it doesn't turn around. Now, next thing you know, you in the hole, you know, or you lost an X amount of money you weren't planning on losing because you thought it was going to turn around because of whatever, news, someone told you something, whatever. Go with the market, as O said. And then the last point you made was on the wrong side of the market, don't let your stock side stay there. So if the market is going in the opposite direction, like go with it. Like he just showed you on the chart, like go with the market. Now he went through in a very fast way, but for those of us, if you've been following our stock trade and investment, podcast with you'll start to understand what he's talking about. But then if you want to go deeper to really understand if you're stuck, if you're not sure, if he's going too fast, has a program that he does that he teaches people how to trade. I don't know. I don't want to say too much. I know you were working on doing something with some youth as well on showing them how to get into the stock market. And when I say youth, I'm talking about teenagers, not
teenagers,
20s. No, I'm talking about teenagers.
Yeah.
And so, and he's working on teaching teenagers on how to get into the market and do things. At the same time, I have and am still working O's program. And so I had to develop my own strategy, but use what he taught me and then say, okay, my strategy is this, using what he taught me.
Right.
And I had to tell myself, I'm not doing X, Y, and Z, but I will do A, B, C. And my strategy is if everything adds up, I take the trade on my strategy based on what he taught me. If it doesn't, I don't.
Don't take it. Yeah.
Because the thing about the market is you can't be greedy because it will snatch you. If you try to be greedy, it will do it. It will snatch you up every time. That's all I'm going to say. Now, what we are going to do, we're going to come back, take a quick commercial break real quick, and then we'll come back to end this segment out. All right, take a quick commercial break. Family Money Podcast. Be right back. Are you looking for an apparel company that's positive, uplifting, and truly cares about you? Then look no further. Frame of Mind Inc., an apparel brand company, impresses on individuals to think positive thoughts, say positive things, and do positive deeds. Get positive apparel, such as t-shirts, hoodies, and wristbands for children, teens, and adults in various colors and sizes. Customized services include logo and t-shirt design, screen printing, and embroidery for individuals, families, schools, profit, and nonprofit organizations. You can reach Frame of Mind Inc. at 302-689-3499 or visit their website at www.frameofmindinc.com. Frame of Mind Inc. Think it, speak it, achieve it.
It's a frame of mind.
All right, guys, we're back real quick to just kind of wrap this up. So, again, O gave us 3 awesome tips today. Hope you guys wrote those down. If you need to, always come back to the replays of these and get the information. Share it with somebody else who needs it. It's always good to get more info. The more you learn, or actually, I'll say this: it's a old NBC phrase. The more you know, the more you grow. If anybody has been around NBC for a long time, that has one of their the star used to come across the screen. It would shine. It said, "The more you know, the more you grow." So we want you to grow here. We want you to grow spiritually, naturally, all that great stuff. One thing real quick before we go, you mentioned to talk about going with the market.
Yeah.
And it's been said in times past, and you can just give us a quick answer on this, that when things are selling, buy. When
Right.
things are buying, sell. And that was like pushed for a long time. And then people started realizing like, wait a minute, like, why am I going against the market
Right.
rather than going with it? Whether it's selling or it's buying. Like if you go with it, you will make the necessary funds that the market is doing. So just real quick, how important is it to go with the market, whether you're day trading, you're swing trading, or you're doing a long trade where you're in a trade for weeks? Like how important is that?
It's very important because, like I said, our little twos and fews, I don't care if we got hundreds of thousands of dollars, we can't move the market. So it's like we gotta like ride the wave of a big of a killer whale, which are the big banks.
Yeah.
So like as they say in the market, the trend is your friend.
Mm.
And they also say you can't catch a falling knife. So if the market's going down, you need to be on the trend with it, not trying to catch it at the bottom, because you don't know when the bottom's coming, and you don't know when the top is. Yeah. So it's just best to ride the wave, get on the trend. The trend is your friend, and get a part of that money that's pushing the market, and then we can get off. Ride on the wave and get off. Let them take care of the rest.
Yeah.
You know, so
Good stuff, brother.
yeah,
Now,
man.
again, we aren't pushing that, get money, get money, get money. What we are saying is that money is a resource
Tool.
that makes the world go around. A tool makes the world go around.
Yeah.
And so understanding how to work in this particular market will help you to be able to do things needed in your life, whatever that is, whatever those things are for you. I can't tell you what they are for you, only you know that. But we're not pushing get money, get money, get money. What we're saying is that if you want to do certain things in your life where you can make some residual income and get some things, the stock market is a way to do so, whether you're trading, you're doing stocks, whatever, digital currency, all that stuff. That's all I'm gonna say. This is not my segment. I'm just elaborating, kind of, putting stuff out there in people's minds, asking questions that you guys would ask, just so that you guys can get some quick answers from my man O while he's here. That's our show for today. Thank you, O, once again. We will do another stock and trade and investment podcast in the next quarter. So we're doing them quarterly now. We're not doing them every month. We're now doing them quarterly. So the next one, we won't have the next one until January. So you guys got to go back, get all the old stuff, catch up on the new stuff. We'll have a new one for you in January. Thanks for joining us again on the Affirmation Wednesday podcast. Continue to think it, speak it, and achieve it. And until next time, I holla. Thank you for joining the Frame of Mind Inc. podcast. And as always, here at Frame of Mind Inc., think positive thoughts, say positive things, and do positive deeds. As our tagline says, think it, speak it, achieve it. See you next time.
It's a frame of mind. It's what you say and what you do.
Don't forget to check us out on the web at www.frameofmindinc.com, where you can browse our online apparel store, listen to some of our original music and production services, as well as view our videos and projects we've done for our clients and customers.